See, did you all understand how to calculate? What is the meaning of the block? Tell me. Block means group of assets which are of same type having same rate of depreciation. Now in this block, whatever assets are there, the moment you put any asset in the block, identity of the asset is gone. Now you are not supposed to identify individual assets because the identity is gone. Will you remember this? Hello? Now how to calculate the value of the block? How to calculate the value of the block? First of all, take the opening WDV. Take the additions during the previous year and put to use separately 180 days or more, less than 180 days and not used at all. Yes or no? Identify and write them separately. Now after adding the additions, you will reduce the deletions. During this previous year, whatever assets have gone out of your business, meaning they are going out of the block, reduce those assets from the block, but against them whatever selling price is received, whatever scrap value etc. you have received. So the moment the asset will go, some amount will come. So to the extent of that amount, cost in the block is recovered. Reduce that. Understanding? To that extent we are not going to give you depreciation. To the extent of recovered cost, we are not going to give you any depreciation. Reduce that. Whatever balance will remain, this is the depreciable value of the block as on the last day of your previous year. As on the last day of the previous year. On this value, you are supposed to calculate the depreciation. On full value, full rate, no? On the full depreciable value, you will apply full rate. Out of this value, separate the value which is equal to the cost of those assets which are acquired in this year but not used at all. On that, no depreciation. Yes or no? During this year, whatever assets are acquired, so out of the value, separate that value which is equal to the actual cost of those assets which are acquired in this year but put to use for less than 180 days. On that, you will calculate depreciation at half rate, and on the balance value you calculate at full rate. Easy or not? Now the depreciation which you have calculated has to be reduced out of the value of the block, because out of the total cost, this much cost which you have calculated in the form of depreciation, you are going to claim this cost in this year. Now only the balance amount of cost after depreciation will be available in the subsequent years, and that will become your closing in this year, and that will become the opening in the next year. Understood? Sure? Okay. Now I'll give you one problem. You are going to give me the solution. Okay. For example, let's take the plant and machinery block only. Which block? Plant and machinery block. Depreciable at the rate of 15% only. Okay. In this block, opening WDV as on 1st April 2025. Then there will be additions. Additions which are greater than equal to 180 days, less than 180 days, and not used at all. Okay. So 5 assets are there. 1 assets are acquired in this year. 5 assets having a value of 10 lakhs. 1 asset acquired 3 lakhs. 1 asset acquired 5 lakhs. And there is no asset acquired. So, sorry. This will be dash. I'll put this as dash. Okay. So no asset acquired in this year which was not put to use. Only 2 assets were acquired in this year. One was put to use for 180 days or more. Another was put to use for less than 180 days. Okay. If one asset is acquired in this year and it was not put to use, then you will write down that asset also, you will write down the cost also. But if there is no such asset, this will be dash dash. Yes or no? Now tell me, how many assets are there in the block now? 7 assets are there in the block. How much is the total value of the block? Now out of this, some deletions will also happen. Okay? Deletions. For example, 3 assets are gone. How many assets gone? And for that, you are getting 5 lakhs. How much you are getting? 5 lakhs. So what is the depreciable value of the block as on the last day? In the block you will have 4 assets having a total value of 13 lakhs. Done, sir? Done, sir? Calculate the depreciation. Come on. And calculate the depreciation assuming that this asset is still there at the end of the year. Yes or no? So first assumption, assume that the asset which you have acquired in this year and put to use for less than 180 days, this asset is still there with you in the end. Assume that and calculate the depreciation. Simple. On 5 lakh you are going to calculate half rate. On the balance you are going to calculate full rate. Simple. Sir, how much depreciation? Tell me. Total. $157? Everyone getting 157,500? Tell me yes or no. How come? Out of this 13 lakhs, on 5 lakhs, you have calculated how much? 7.5%. And on the balance 8 lakhs, you have calculated full rate. So see, here, pay attention. Less what? Less depreciation on. Depreciation under section 32. Under section 32. Subsection 1, clause 2. On what amount? First of all, you will calculate on entire 13 lakhs you will calculate. No. On 5 lakhs, you are going to calculate half rate into 15% into 1 by 2. Half rate. Yes or no? And on the balance 8 lakh, you are going to calculate full 15%. So, how much is this? Tell me. This is again 37,500 and on 8 lakh 15% will be 1,20,000. So this is your total normal depreciation for this year. So how much depreciation you are going to reduce out of your business income in this year? 1,57,500. You are going to reduce from your business income. Yes or no? So from your business income of this year, the total depreciation available will be 1,57,500. Done, sir? Now this 1,57,500 you are going to reduce from 13 lakhs. So how many assets are still there in the block? 4 assets and having 11 lakh 42,500. Everyone understood this? Sure. Now, should I twist the example a little bit for you? This is a very simple example. Okay, no? Now, the same example, I will keep on making different cases. Okay? So, first case, understood. This is first example. Now, second example, guys. See. Copy and then paste. I will just change the color so that you come to know that this is not the same thing which you did. This is different thing. So let's take purple color. Color, purple color. Second example. Opening, 5, addition, this, that, everything. Now you are selling how many assets out of the block? Example, you are selling 4 assets in the block. 4 assets you have sold. And by selling the 4 assets, you are getting 15 lakh rupees. Not 15, you are getting 14 lakh rupees. Possible or not possible? So now how many assets are there? How many assets are there? 3. How much value will remain? Now, see, in the earlier example, now if I assume, what did I say? If I assume that this asset is not there, meaning this year when you sold these 3 assets, this asset also you sold. Meaning, in the end, this asset is not there, then on that entire 13 lakh you would have calculated full rate. Because end of the year, this asset is not there. Then you cannot apply half rate. Then you are supposed to apply full rate. Why did you apply half rate? On 5 lakhs, out of 13 lakhs, on 5 lakhs, why did you apply half rate? Because the assets which are remaining at the end of the year, in these assets, this asset is still there. So in this value, out of this value, 5 lakh will be depreciated at half rate. Understanding or not? That same assumption I am taking here also. Same assumption I am taking here, that in these 3 assets, this one asset is still there. So calculate the depreciation now. So I wanted to put you in this trouble only. That is why this example. Sir. Last day of the previous year, how many assets are there? This asset is still there, sir. So out of the total value, on the value of that asset, you are supposed to calculate half rate. But the value remaining is less than the value of that asset. Then what to do, sir? On the full value, you will apply half rate. On the full value, you will apply half rate. Wait. This value, what did I say? Value remaining at the end of the year is less than the actual cost of that asset which was purchased in this year and put to use for less than 180 days. If this value is less than this cost, then on the entire value, you are supposed to apply half rate. Only if this asset is still there. So in my example, I have assumed that this asset is still there. So now tell me, if I will calculate depreciation, less what? Depreciation under section 32(1)(2). On what? On entire 4 lakhs, you are going to apply what rate? Half rate. 15% into 1/2. Tell me how much? How much? 30,000. Okay. Now calculate. This will be 3 assets remaining having 3,70,000. This will be the closing WDV. This will be the closing WDV as on 31st March 2026. Now wait. Should I twist it a little bit? Little. What if this asset was not there? Then on the entire value, you are free to apply full rate. 60,000. Then the depreciable value will be, final value will be 3,40,000. Understood? Sure, sir? And see, they are going to put you in such type of troubles in the exam. And if you don't remember this example, no, 100% you are going to calculate wrong depreciation. You will say, sir, I want to calculate depreciation at half rate on the value, but the value remaining is less than the actual cost of that value. What to do, sir? You will stop yourself like this. Keep on thinking. And then, if you will not remember this thing, you will calculate depreciation wrongly. Again, I am telling you, see, If the value remaining at the end is less than the actual cost of that asset which was purchased in this year and put to use for less than 180 days, then on the entire value you are supposed to apply half rate if this asset still exists in the block. Otherwise apply full rate. Done, sir? Now, few more examples. Ready? Okay. Tell me one thing. You are calculating depreciation, no? Every time when you calculate depreciation, did you notice one thing? That if the block is there, what did I say? Block is there. In the block, at the end of the day, at the end of the year, asset is also there, value is also there. Why did you calculate depreciation? Asset is also there, value is also there. Asset is also there, value is also there. Here also. Asset is also there, value is also there. Every time when you calculate depreciation in block, block must have assets at the end of the year. And against that asset, some value should also be there. Only then, what did I say? Only then depreciation will come under section 32(1)(2). Only then the depreciation will be calculated. Now sometimes it might happen that block has assets, but block does not have any value. Or it might happen block is having value, but block does not have any asset. Or it might also happen that block is not having asset also, block is not having value also. In all these three cases, you cannot calculate depreciation. If you want to calculate depreciation, two things are must. End of the year. As at the end of the year, the block has assets also, and against that asset some value is also there. Only then you can calculate and claim depreciation. But what if assets are there but no value remains? Value is there, no assets are there. No value, no assets. In all these cases, depreciation cannot be calculated. So, I will frame few examples for this thing. And then again I will come here and tell you to fill in the blanks. Okay? Because there are blanks which we have to fill. Okay? So first example. Example number 1. Four cases are there, no? How many cases are there? 4. So we are going to make 4 cases. Okay, no? Case 1. Case 1. Let's take the block of plant and machinery. Depreciable at what rate? 15%. Okay. Opening WDV. Add additions. In additions, greater than equal to 180 days, less than 180 days, and not used at all. Then less what? Deletions. Okay. Now tell me, in opening, I am having 5 assets. 1, 1 and dash. Deletions, 3 assets. Okay, no? Now 5 assets. What was the value? 10 lakhs. 1 asset, value 2 lakhs. And this asset is having a value of, example, 4 lakhs. And here it is dash. How many assets are there? Come on, tell me. 7 assets are there. Total value 16 lakhs. Now out of 7, 3 are sold. 3 are, how many remaining? 4. And 3 are sold for 9 lakh rupees. How much? So tell me, how much will remain? 7 lakh will remain. My first question. As on the end of the year, this is the situation as at the end of the year. Tell me, assets are there or not there? Value is also there or not there? Now calculate the depreciation. No problem in this. We calculate depreciation only if the assets are there and the value is there. Calculate depreciation. How much will be the depreciation? Assuming that that asset which was purchased and put to use for less than 180 days, that is still there. So the depreciation here will be 75,000. How did you calculate this 75,000, sir? On 4 lakh you calculated 7.5%, and on the balance 3 lakhs you calculated 15%. So total is 75,000. So tell me, did you calculate the depreciation? Why did you calculate the depreciation? Because end of the year assets are also there, value is also there. So you calculated the depreciation. Now 4 assets are there having 6,25,000 value, and this will become your closing WDV. This will become opening in the next year. This is a very easy case. Okay, now? Now see, same case. Case number 2. Case number 2. Okay. Pay attention, guys. Case number 2. Same things. Duplicate. Okay. And this is my case number 2. How many assets are there in the block? How many assets are there in the block? 7 assets. Having how much value? 6 lakhs. Out of 7 assets, I have sold 6 assets. And I received 17,20,000. Possible or not? Possible or not? Will I still have asset remaining in the block? How many assets are remaining? 1 asset still remains. But don't you think entire 16 lakh you have recovered by selling 6 assets of the block? You have recovered the entire value of the block having 7 assets. Yes or no? Now tell me, entire cost which we were supposed to give you as what? Depreciation. Have you recovered that entire 16 lakhs? So how much value remains in the block? Nil. So assets are there in the block, but the value is not there. Bloody, if you want to claim the depreciation we will allow the value only. We are going to allow you in the form of depreciation. That value itself is not remaining. What depreciation we should allow? So this year the depreciation will be nil. Depreciation will be nil. And don't you think excess 1,20,000 you have recovered? This is over and above the cost of those assets which are there in the block. So this extra amount which you have recovered now will be treated as your short-term capital gain under section 5050. This will be brought to capital gains. Because over and above the cost of those assets which are there in the block, whatever recovery is happening, that is your gain, which we will charge under the head capital gains. Understanding? So, this second case, I hope you understood. I hope you understood. Should I move on to the third and fourth case? Again, see, same. Copy and paste. Now this is your case number 3. Case 3. Tell me, in case 3, how many assets are there in the block? 7 assets. What is the value? Now out of this, deletions will happen. Now tell me, deletions, for example, all these 7 assets are gone. I am selling all these 7 assets. And by selling the 7 assets, I receive 15,40,000. Possible or not possible? Is it possible? So now tell me, out of 16 lakh, how much I have recovered? So there is 60,000 value of the block still remains. But to represent this value, do you have any asset? No asset remaining. Meaning here, even though you have what? Value remaining, but to represent this value, no assets are remaining. Here also, we cannot allow you depreciation. This 60,000 we would have allowed you in the form of depreciation, provided to represent the 60, there has some assets. No assets are there in the block to represent this 60,000. So how do we allow this 60,000 in the form of depreciation? We cannot. Then it will be my loss. Yes, it will be your loss. Under the head capital gains, this will be treated as your short-term capital loss as per section 5050. Are you understanding or not? So this 60,000 remaining will now be treated as your short-term capital loss under section 5050. Under section 5050. Will you remember this? Now in my last case, it was short-term capital gain. Why? Because no value remaining and I recovered more amount. Now in this case, in the second case, my question is, do you still have the block? In the second case, do you still have assets remaining in the block? Meaning, do you still have the block? Yes. So in the next year, opening WDV will be 1 asset. Having how much value? Nil. And whatever additions will happen in this one only. Understanding? This year, tell me, do you have a block remaining? So next year, opening WDV, 0. Everything will be 0. Next year, again, if these assets are purchased, next year, the block will be formed for the first time again. Because this block ceases to exist in this year only. Because no assets are there in the block. Understanding or not? Tell me yes or no. Now, same example. 5 assets. Oh, sorry. So, now this is my case number. Now this is my case number 4. In case number 4, what I am doing? See, how much is the, how many assets are there in the block? 7. How much is the value of the block? 16 lakhs. All these 7 assets I am selling during the year, and by selling all the assets, I am recovering 16 lakh 10,000. Possible, not possible? Now tell me, will there be any value remaining in the block? No, because entire value is recovered by selling the assets for 16 lakh 10,000. Don't you think 10,000 extra you have recovered over and above the value of the block? Isn't it a gain for you? So that will be treated as your short-term capital gain under section 5050. Will you remember this? Now under the capital gains head, don't expect me to teach you section 50. Because section 50 I have already covered here. I'll just give you some revision at that time. But these cases I'm not going to discuss again in capital gain, because I have already discussed them here in PGBP. Done, sir? So tell me, now fill in the blanks. Now fill in the blanks. Block has asset. Block has value. Will you calculate depreciation? Yes or no? Block has asset, but block does not have value. Will you calculate depreciation? So, in this case, entire value is recovered. Any recovery over and above that value will be treated as your short-term capital gain under section 5050. Now, third case. Block has assets or no assets? No asset, but value still remains, which cannot be allowed in the form of depreciation. So that much amount of cost still remains to be claimed in the form of depreciation, which cannot be allowed in the PGBP head. Now you claim it in the form of capital loss. As per section 50, that will be treated as your short-term capital loss under section 5050. And last one, value is also not there, asset is not there. Hello? Meaning? Any excess recovery will happen in that case, because entire value is recovered, and over and above that value, if any excess recovery is there, then that excess recovery will be your short-term capital gain under section 5050. Done, sir? Now first two cases and last two cases. In the first two cases, can you see assets are still there in the block? Meaning block is gone or block is still there. So this situation is known as block does not cease to exist. This means closing some assets will be there with some value, without some value, and that will become opening in the next year. Block still exists. Block does not cease to exist. Yes or no? And last two cases. Can you see assets in the block? All the assets are gone, and this situation is known as block ceases to exist. So if block ceases to exist, you will either have short-term capital gain or you will have short-term capital loss. But if the block does not cease to exist, you will either have short-term gain or you will calculate depreciation. Will you remember this? With the help of this number example, did you understand everything? Okay, perfect. Very good. So this was your depreciation under section 32.1.2. 32.1.2 talks about depreciation on the value of block of asset, which you have to calculate as per the rates prescribed in appendix 1 to rule 5.1, and which you are going to claim on WDV basis. What is the meaning of block of assets? I have already told you. How to make that block? I have already told you. Different examples, I have already explained these examples. Yes or no? See, just now I discussed this thing only with you. Okay, but the numbers will be a little bit different here, because the numbers which I took are different. Concept is same, just the numbers are different. Okay, no? Next one. Now see, depreciation rates which are applicable on what? Different blocks. So ask me a question, sir. Sir, do we have to remember these rates? Yes. Few rates you are supposed to remember. And I will tell you, see, majority of the cases they are going to give you the rates. But sometimes they might not give you the rate also. In that case you have to remember the rates. Now which rates are important for you? I will tell you those rates. Okay, no? So let's come to table. One table is there. Having rates of depreciation. Okay, no? $216, no? Okay, see. Can you see this table? Rates of depreciation. Okay, I'm going to explain these rates. Now tell me, how many assets are there? How many assets? Type of assets. 4. Number 1. No. Building. Land is not recognized only. Forget about land. No need to talk about land. Building. Then furniture and fixture. Then plant and machinery. And then intangibles. For intangibles, you will have to remember the rate. See, end of the table. Can you see intangible assets? Remember the rate. What is the rate of intangible assets? 25%. So all the intangibles, one block will be made. All the intangibles, one block will be made. Where you will put all the intangible assets. Other than goodwill. Other than, because goodwill is not a eligible asset anymore. Yes or no? All the intangibles, one block, and on that block value, how much rate of depreciation you will apply? 25%. Remember this rate. Okay? So for intangible, only one block. Now come to tangible assets. Come to tangible assets. Now tangible assets, first asset is building. Now in building, no, there are 4 blocks which can be created. Because in your business, there can be different types of building. If the buildings are residential in nature, can you use residential buildings in your business? Yes. Do you remember one example I gave? I went to audit Ultratech Cement. Hello? Company Birla. Birla company is running a cement factory. And just opposite to that cement factory, hello? One big township they have made. In that township, they have constructed small houses which they are giving to their employees. Those houses are residential buildings which are used by assessee in his business to keep his employees. So I am talking about which buildings? Residential buildings used for the purpose of business or profession. So block of all the residential buildings will be created separately because residential buildings are depreciable at 5%. Which rate? The moment they are going to tell you residential buildings, you have to apply rate 5%. But see, residential buildings will not include guest house and it will not include hotel buildings. They are not treated as residential buildings. Yes or no? So other than, what did I say? Other than, please remember, except hotels and boarding houses. Hotels and boarding houses, meaning guest houses, etc. Yes or no? Write down guest houses. So other than hotels, guest house, meaning boarding houses. Any other building is there which is residential in nature. All such building will form one block because all such building have what rate of depreciation? 5%. Sir, yes sir? No sir? Yes sir? Now, other buildings. Some buildings are temporary structures. Temporary structures including wooden structures. So sometimes in my business, I construct some buildings, but those buildings are temporary in nature. The moment the use of that building will be done, I will demolish them. Best example is construction site. So I am in the construction business. So in my business, I am doing construction of buildings. Yes or no? To construct those buildings, I need laborers. I need laborers who will be working on my construction site. Now that construction will happen for 1 year, 2 years, the construction will keep on going on. Now, I will construct some temporary structure on my construction site itself so that my laborers can stay there. Once the construction is over, laborers will go out and I will demolish all those structures, small hutments which I have constructed for my laborers who are going to stay on that site only. Getting my point? So all those buildings are constructed by me, are used in my business, but they are temporary in nature. And this also includes wooden structures. Yes or no? Sometimes wooden structures are also constructed, okay, for my business or profession. So any building which is Tell me, temporary erections such as wooden structures, etc. will be depreciated at what rate? Now, all the buildings you are not supposed to put under one block. Residential building under one block, and the buildings which are temporary structure, including wooden structures, will be kept in separate block, because that block has a depreciation rate of 40%. Depreciation rate of 40%. Will you remember this? Will you remember this? So building has two blocks so far. Third block, see, I might have a water supply project. I might be having a water supply project or having a water treatment system. Okay. So in my business, there is a water supply, water treatment plant. Sometimes in some factories, no, what happens? That factory uses some water for its production processes and all. And in the production processes, what happens? That water gets contaminated. That water gets polluted. So that factory cannot, cannot release that water without treating it, because that water contains too many chemicals. So before releasing that water out of my factory, out of the factory, after the water is used, in some factories, in some big factories, water is used in the production process. And when the water is used in the production process, what happens? That water gets polluted. Chemicals are mixed with that water, and now that water is no more of use in the factory. So what the factory does? That factory releases that water. That contaminated, that polluted water, if you will release in the environment, that is going to pollute the environment. So there are strict norms that in case of certain industries, if the waters are used and if that water gets contaminated, if that gets polluted during your production process, so you cannot release that water out of your factory without treating that water. Remove the pollution, do the treatment of that water and eliminate the pollution, bring it to a certain extent and then release the water. Now in my factory, I will have to set up a water treatment plant. And in that plant, this entire water will get treated to eliminate pollution. Getting my point? So that water treatment plant, for that water treatment plant, some structure is constructed. And in that structure, in that building, that water treatment plant is installed. So there is a building. There is a building. In that building, I have set up that water treatment plant. Water treatment plant is a plant and machinery, but to keep that water treatment plant, a building is there. In that building, that water treatment plant is erected. So that building which is used, for installing what? Plant and machinery, forming part of water supply project or water treatment system. So that building will be a separate block and that will be depreciable at the rate of 40%. Any other building which is not residential in nature, which is not a temporary structure and which is not covered in block number 3, all other buildings will be covered by block number 2, like office premises, factory buildings, godowns, yes or no, malls, cinema halls, all the buildings which are used in my business or profession, which are not residential in nature, which are not covered by block number 3 or block number 4, will be covered here, and the rate of depreciation on those buildings is 10%. Now, do you remember the guest house and hotel you have excluded? That guest house and hotel will also fall under block number 2 only, depreciable at the rate of 10%. So please include, write down here, including what? Hotels and guest house. Because hotels and guest house are excluded from residential building. So definitely they are not covered by block number 3 also, not covered by block number 4 also. So definitely they are going to be covered by block number 2. So buildings will have how many blocks? 4 blocks. Now out of all these blocks, no, only one rate is very important. 10%. If nothing is mentioned in the question, apply the general rate of building, that is 10%. But if specifically they are mentioning that the building is residential, then you will apply 5%. If they are saying that the buildings are temporary structures or wooden structures, then you will apply 40%. And if they are saying that this building is used for installation of water treatment plant or any plant and machinery for water project, water system, water project, yes or no, then for that building you are supposed to apply 40%. Understanding? So how many rates? 4 rates. 4 different types of blocks of building can be created. But only one rate is very important for you. Remember this rate. Okay? Now, wait. Sometimes you buy land and building together. Sometimes you buy land and building together. So the total cost which you will incur, that cost will also include cost of land and cost of building. Out of that, you will have to find out the cost of land that you are going to exclude, because land is not a depreciable asset. Cost of land cannot be claimed as depreciation. That will go to capital gain head. So here under the block of building, only the cost of building you are supposed to bring. Yes or no? Sure. So write down here only. Somewhere it is. Somewhere please write down. Land and building acquired together, then cost of land. Cost of land will be ignored and cost of building only to be considered for the block purpose. Only that can be claimed in the form of depreciation. Interesting, no? Understanding or not understanding? Going heavy? Heavy? You want break? Huh? Break? Go take a break. I will keep on teaching. Did you understand this much? First of all, tell me yes or no. Should I move on to the next block? See, after building, furniture and fixtures are there. Furniture, fittings and fixtures. And fixtures. Now see, what all things will be covered here. You have to be very careful. Huh? Pay attention. Everyone. Table. This table. Will it be covered in this block? Table. Will it be covered in this block? Why? Because it is furniture. The benches on which you are sitting? Furniture. Yes or no? Now second thing. Can you see the podium on which I am sitting right now? This podium is what? Furniture. It is a fixture. It is a fixture. This ceiling which is made is what? Fixture. These doors which you can see are fixtures. The windows which you can see are fixtures. So all will be covered under this block. Yes or no? First of all, can you see the wirings which are there, wires are there, cables, and the switchboards, etc., which you can see are fittings. Even they will be covered under this block only. Switchboard, internal wiring and all, yes or no? All those things are fittings. Furniture, fittings and fixtures. Everything will be covered under one block, and for that the rate is 10%. Please remember this rate also. Very, very important. Okay. The fans are there. Fans are also known as, these lights are there. These are known as fittings. Furniture and fittings. Eligible for 10% rate. Next one. Now plant and machinery. Now plant and machinery. See, general rate of plant and machinery 15%. General rate of plant and machinery. If the plant and machinery is not covered by any specific block, then the plant and machinery is a general plant and machinery. You are going to cover that under 15%. Now, specific type of plant and machinery, they are saying that if the plant and machinery is motor car, motor cars, other than those used in the business of running them on hire, acquired during the period from 23rd August 19 to 31st March 20 and put to use, acquired during this period and put to use on or before 31st March 20. So do you have motor cars? Are you using the motor cars in your business? But your business should not be running the motor cars on hire. Any other business is there. So in any other business, your business is not to run the motor cars on hire. Meaning, cab company, transportation company, your business is not to give the motor cars on rent. Give the motor cars on hire. Your business is not this. Your business is some other business. Now in some other business, if you are buying the motor car, when did you buy that motor car? Between this period. And you have to put to use that motor car on or before 31st March 2020. Then all such motor cars will go to separate block having how much rate of depreciation? 30%. How much rate? 30%. But wait. If you purchase the motor car after this date, if you purchase the motor car after this date, then it will go to general block 15%. But only those motor cars which are purchased during this period and put to use for on or before 31st March 2020, on those motor cars the rate was doubled. It was 30%. Yes or no? Hello. Don't worry. After doing this, no, for motor car, I'll prepare one chart. Go and read that chart, things will be done. But first of all, whatever I have told, did you understand? Are you in the business of giving the motor cars on rent? Hiring them? You are in any other business. In your business, did you acquire motor car? And you have to acquire the motor car between 23rd August 2019 to 31st March 2020. And you have to start using that motor car on or before 31st March 2020. Then all such motor cars will have a rate of depreciation of 30%. Then motor cars other than those used in the business of running them on hired, acquired or put to use on or after 1st April 1990, other than motor cars mentioned in block 1 above. See, if your motor car is not covered in block 1, no, in all the motor cars 15%. But you should not be in the business of giving the motor cars on rent, giving the motor cars on hire. Then in your business, whatever motor cars are there, 15% rates are there. But on certain specific period, if the motor car was purchased and it was put to use prior to 31st March 20, then on those motor cars, the rate is not 15%, the rate is 30%. Understanding? Provided you are not in the business of giving the motor cars on rent. Now, come to block 3. Now, this block 3 covers motor buses, motor lorries, motor taxis, used in a business of running them on, hired, acquired during the period, this, and put to use on or before this date. Then on such motor cars, the rate was 45%. Now can I see this period you saw here also? Hello? Now during this period, if normal motor cars are purchased, then the rate is 30%. And during that same period, if the motor cars are purchased, motor lorries, buses, trucks, etc. are purchased for giving them on rent. Your business is giving these motor cars, buses, etc. on rent. Then on those motor cars, those motor vehicles, the rate will not be 30%, the rate will be 45%. But in any other case, if the same motor buses, etc. were acquired other than this block 4, then the rate was 30%. Now tell me, if I want to create a small chart, okay, first of all, motor cars meaning vehicles, etc. Motor cars or vehicles. Now what are the vehicles? Tell me. It can be motor trucks, motor lorries, buses, etc. Okay, no? Now they are used in my business. Now tell me, motor cars, vehicles. First of all, two types. First, not used in the business of giving them on rent or hire. My business is not to give the vehicles on rent. Then again two parts. What I will say? Acquired between 23rd August 2019 to 31st March 2020 and put to use up to 31st March 2020. Then how much rate? Come on, tell me. Then how much rate? 30%. Otherwise, the rate is 15%. Hello? Did you understand, sir? Next one. If the motor car, motor vehicles are used in the business of giving them on rent or hire, then same thing. Acquired between 23rd of August 2019 to 31st March 2020 and put to use up to 31st March 2020, then on these motor vehicles the rate will be 45%. Otherwise the rate is 30%. See, normal motor cars rate is 15%. If the motor cars, motor vehicles are used in the business of running them on hire, then the rate is 30%. But if these motor cars were purchased and put to use during specific period, no, then the rate was 30% and 45%. But only in the case of those motor vehicles which were purchased and put to use during that specific period, this block was there. So right now in your business, motor vehicles can be there, which you purchased during 23rd August 2019 to 31st March 2020 and which were put to use prior to 31st March 2020. Still those motor cars, motor vehicles can be there in your business. On those vehicles, what rate will be there? Either 30% or 45%. If this is not mentioned, then you are supposed to take 15% and 30%. That's it. Understanding? Will you remember this? So how many blocks are there? 4. Earlier there were only 2 blocks only. But because of the specific dates, now 2 more blocks have been added. So which rates you are going to remember? Which rates you are going to remember? This and this. If specifically these dates are mentioned, if specifically these dates are mentioned, then it will become 30 and 45. 15 will become 30 and 30 will become 45. Understood? Should I move ahead? Sir? Madam? So, remember block number 2 and block number 4. Important, huh? Block number 2 and block number 4. Now, molds used in rubber and plastic goods factory, just read once, 30%. No need to remember. Aeroplanes, aero engines, what is the rate? 40%. Specified air pollution control equipments, water pollution control equipments, solid waste control equipments, and solid waste recycling and resource recovery system, 40%. No need to remember all these rates. Understanding? Whatever rates I am marking now, please remember those rates. Okay, no? Plant and machinery used in semiconductor industry, block number 9 is important. Life-saving medical equipments. Who is going to use this medical equipments? Carpenter, no? Or doctor? So are you a doctor? Running your own hospital, own nursing home? In your hospital, in your nursing home, will you use medical equipments? On all the medical equipments, the rate is 15%. But if the medical equipment is a life-saving medical equipment, then the rate is 40%. So write down here only. Life-saving medical equipment, 40%. Any other, what did I say? Other medical equipments. Other medical equipments, rate will be general rate, 15%. That is a general plant and machinery. So if in the question, they are asking you the question for a doctor, and they are telling you medical equipments are there, you will apply 40% or you will apply 15%. But if they are specifically telling you life-saving medical equipments and then you are taking 15%, then your answer will be wrong. You have to remember 40%. Yes or no? Hello, sir. Next one. Now, next one is also not important. Now directly come to block number 15. Important. Computers, including computer software. By the way, computer software is an intangible asset. But don't put the computer software in the intangible asset block. Put it in the block of computers only. Because you cannot use this software without computers. So it is an integral part of your computer system only. So if the computers are depreciated at 40% rate, so computer software should also be depreciated at 40%. Don't put them in intangible asset block. Softwares are what? Licenses only, no? You might have purchased some software, you might have seen user agreement, license agreement in every software is there. You have to agree to that. That is a license which the software company is giving you to use that software. That license is nothing but what? Your intangible asset. But that intangible asset will not go in the intangible asset block. Since it is a computer software, it will fall under the computer block. Now please, along with that, write down any accessories or peripherals used with computers are also covered under this block only. Like any accessories or peripherals, meaning mouse, then keyboards, CPU, then this UPS, uninterrupted power supply, UPS also, servers, monitors. What are they? They are the accessories and peripherals which forms integral part of computer system. They cannot be used without computers. What will I do with this mouse? Can I use it without computer? So classify this also under the block of computers. What will I do with that printer? Printers are also an integral part of computer system only. Put them in the block of computers. Write down the examples over there. Write down. Mouse, keyboards, printers, UPS, servers, etc. So they will also be classified under the block of computers. Will you remember this? Sure, sir. Okay. Books, important, huh? Books, any type of books, any type of books. Now there is no need to classify any types of book. Rate is 40%. All the books. Now can you use the books in your business or profession? All the books will be classified under one block. 40%. Okay. Now plant and machinery general rate. Please remember this also. What is the rate? 15%. If you cannot classify any plant and machinery in the earlier blocks, 17 blocks, then that is a general plant and machinery. The depreciation rate is 15%. If the question is silent, does not speak anything about the plant and machinery, then you apply this general rate only. Otherwise, they will tell you whether the plant and machinery is a computer, then you will have to apply 40%. Then if they are telling you that if the plant and machinery is a vehicle, then you will have to apply 15% or 30% as the case may be. Understanding or not? Please remember these rates, huh? Very important. Usually the rates are given in the question itself, but sometimes they don't give. In that case, this will help you. Understood? So the rates are also done. Now let's start with illustration number 1. Ready? First illustration. Mr. X, a proprietor, engaged in. But before that, wait now. Before this illustration 1, I need to tell you one more depreciation. Then we'll go to illustration number 1. So this is the end of 3 depreciation. 32, subsection 1, clause 1. 32, subsection 1, clause 2. And 32 subsection 1 clause 2a is also there, and 32 subsection 1 clause 3 is also there. Now please pay attention. You are going to tell me. First case, assessee is in power business. Here what are you going to say? You are supposed to take actual cost of individual asset. Hello? On this value the depreciation will be applied. Depreciation will be available. So depreciation will be available on what value? Actual cost of individual asset. At what rate? On what value the depreciation will be calculated? On this value. At what rate? Come on, tell me. At what rate? 10%, 15%, the rate which you want or the rate which they will prescribe. Where the rates are prescribed? Did I tell you? Appendix 1A to rule? Rule 51A. By applying this rate, the depreciation will be calculated and will be allowed on what basis? SLM basis. You forget everything very soon, huh? I have already told you SLM basis, still people are saying WDV basis. And this depreciation is available for whom? All assessees, no? Or assessees engaged in power business? Sure. Okay. Now, all assessees will claim the depreciation on value. Value of block of assets. At what rate? Appendix 1 to Rule 5, Subrule 1. And this depreciation will be available on what basis? WDV basis. Understood, no? Terminal depreciation already discussed with 32 subsection 1 clause 1. Now my first question is, before telling you about additional depreciation, my first question is, you are in the business of power generation, power distribution, etc. So you are an assessee engaged in which business? Is it compulsory for you to claim depreciation under 3211? Or you can claim the depreciation under 3212 also. So an assessee who is engaged in power business can also claim the depreciation on WDV basis on the block of asset at this rate. So the assessee who is engaged in power business is also eligible to claim this depreciation, But if that assessee wants to claim this depreciation, that assessee has to take this option in the first year in which he has started that business. So the year in which the assessee has started his power business, in that first year itself, he has to choose this option. Then for the first year and in every subsequent year, he can claim the depreciation as per this method. But if he fails to opt for depreciation on block of assets, WDV basis, in the first year, then from the first year and every subsequent year, his depreciation will be on SLM basis on actual cost of individual assets. Will you remember this? Hello? Because this depreciation is available to all the assessees, including the assessees of power business, because nowhere it is mentioned that an assessee engaged in power business cannot claim this depreciation. Even they can claim. But if they want to claim, they have to choose this option in the first year in which they have started this business. So the year in which you start your power business, in that year, choose this option of block system. So in the first year and in every subsequent year, the depreciation will be on what basis? Block basis, WDV basis. Yes or no? But if you fail to choose this option in the first year, then your depreciation we have already fixed. What? Individual asset, actual cost, SLM basis. Done, sir? Done, sir? Should I move ahead? Okay. Now I'm going to tell you about this depreciation. This is additional depreciation. So this was, sir, this was normal. This was normal. This was also normal. This was terminal. And now I am going to tell you additional depreciation. What is this additional depreciation? New depreciation? No. In the first year, some extra depreciation is given as normal depreciation. This is a normal depreciation only, but allowed in addition to normal rates. So in that first year, whatever normal depreciation is available, that normal depreciation also you take, but in addition to that normal depreciation, some extra depreciation will also be available in the first year. And this depreciation cannot be claimed by everyone. Specific assessees. Which assessees? So assessee. Hello? Assessee. Are you any person? Hello, assessee. You are doing any business, but the business should be manufacturing business or power business only. Power generation, power distribution, power transmission, only this business, or any manufacturing business. So any assessee other than those assessees doing this business cannot claim additional depreciation. Only the assessees doing this type of business can claim additional depreciation. Hello? Assessee? Are you manufacturing some item? Some goods? Some products? Or you are in the power generation, power distribution, power transmission business? Yes. Then assessee, for this business, you have to acquire new. Did I write new? New means new. New what? New asset? No. New plant and machinery. Additional depreciation will not be available on all assets. It will be available only on plant and machinery. Any plant and machinery? No. Only new plant and machinery which you have acquired and installed in this business. So you have to acquire and you have to install that plant and machinery in this business, meaning the plant and machinery must be used for manufacturing. The plant and machinery must be used for power generation, power distribution, power transmission. The use must be for production, manufacturing, or power generation, power distribution, power transmission. Machine should be actually used for that purpose. Understanding? And that machine should be new plant and machinery. Then whatever will be the actual cost of this plant and machinery, on that you are going to get normal depreciation for the first year? Yes or no? Along with that normal depreciation, take 20% extra depreciation in this year only. So normal depreciation on this machine we are going to give. You are going to calculate. Yes or no? Add the machine in the block and value of the block. Calculate the normal depreciation as you are calculating. But along with that normal depreciation, extra 20% of the actual cost of that plant and machinery will be allowed in the first year itself. This is additional normal depreciation for the first year. This will be available only in the first year, in which the plant and machinery is acquired and installed. In that first year only, this 20% will be available. Now my question is, first year, the plant and machinery is acquired and installed, but it could be put to use for less than 180 days. Will this be 20% or this will become half? Even this will become half. So now the rate of additional depreciation will not be 20, it will be only 10%. But don't worry. The balance 10% will allow in the immediately following previous year. Because we were supposed to allow you 20% in the first year. But if we are not allowing that 20%, you are losing 10% now. Because you could use the asset. You could put to use the plant and machinery for less than 180 days. Because of that, you lost 10% now. That 10% should not be lost. That 10% will be available in the next year. See, normal depreciation anyways you are going to get. Normal depreciation half, you cannot claim right now. Only half normal depreciation will be available. But the balance which is there, will be claimed in the subsequent years, because normal depreciation is available every year. But this additional was available only in the first year. If this also becomes half, because the asset was not put to use for, less than 180 days, then the 10% which you are going to lose. Because in the subsequent years, now the additional depreciation will not be available, because in the subsequent year, the asset is not a new plant and machinery. And that is not the year in which the asset is acquired. So in those years, the additional depreciation will not be available. So you are going to lose this 10%. Don't worry, you will not lose this balance 10%. We are going to allow you the balance 10% in the immediately following previous year. But even this will become half in the first year in which the asset is acquired and installed. But if that asset was put to use for less than 180 days, then this additional depreciation will also become half. But the remaining half will be claimed in the immediately following previous year. We are going to allow that also. Understanding? Sure. So in the first year, will you be able to claim normal depreciation on this plant and machinery? Along with that normal depreciation, claim this extra 20% depreciation in the form of additional depreciation. Yes or no? Yes or no? So now tell me, this additional depreciation will be at full rate, at 20% rate. If the plant and machinery is acquired and installed in this first year and it was put to use for 180 days or more, then this will be 20%. But if in this year the plant and machinery is acquired and put to use for less than 180 days, then this 20% will become half. This will be 10%, and the remaining 10% will be available in the next following year. Plant and machinery has to be acquired and installed for manufacturing or for power generation, distribution, etc. Now, some plant and machineries are not eligible. What did I say? Not eligible for additional depreciations. Not eligible for 6 plant and machineries are there. How many plant and machineries? If you see any of these plant and machinery, request you not to claim additional depreciation on that, because they are ineligible plant and machinery. Why? Because they are not going to be used for manufacturing. They are not going to be used for power generation, distribution, etc. Getting my point? So since they are not installed for manufacturing, they are not going to be used in your manufacturing process, they are not going to be used for power generation, distribution, etc. Yes or no? You do one thing, no? Shift this a little bit. The door will break, I guess, someday. Okay. So what I was saying? What I was saying? 6 plant and machinery. 1, 2, 3, 4, 5, 6. Any of these plant and machinery you have acquired, can you claim depreciation on them? Yes. Claim normal depreciation amount, but don't claim additional depreciation. Because to claim additional depreciation, they must be used for manufacturing process. They must be used for power generation, distribution, transmission, etc. And the plant and machinery which we are writing here are not used for that manufacturing process. Or maybe a second-hand plant and machinery. Or maybe a plant and machinery whose entire cost we have already allowed under other sections. So first question, are you an assessee? You can be any person. You are doing what type of business? Any business. Or only manufacturing? What are you manufacturing? You are manufacturing anything. Any goods, any products, any item you are producing. Manufacturing, yes or no? Other than sin goods. Other than? Sin goods, no. So if you are a manufacturer of sin goods, then additional depreciation not allowed. Okay, no? So you are supposed to manufacture any item, any goods other than sin goods. Yes or no? Or you are in the business of power generation, power distribution, power transmission, or power generation, distribution and transmission. In this business, if you have acquired a new plant and machinery and you have installed in these operations, then on that plant and machinery, whatever actual cost was there, 20% of that actual cost we are going to allow additionally in the first year itself, in the form of additional depreciation. But remember, 20% will become half. 20% will become if that plant and machinery was put to use in the first year for less than 1. So the year in which the plant and machinery was acquired, in that same year, if the plant and machinery was put to use for less than 180 days, then the additional depreciation will not be 20%, it will be 10%, and the remaining 10% will be in the immediately following year. Will you remember this? Will you remember this? Now, which plant and machineries are not eligible? 1, 2, 3, 4, 5, 6. You want to see the names? But you will have to remember those names. Come on, let's see. Let's see. Which are the plant and machine? 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Number 1. Bloody, you are buying a plant and machinery which is ships and aircrafts. What manufacturing you will do with this? Are these ships and aircrafts used in manufacturing, power generation, power distribution? Sir, but it is my plant and machinery. Sir, brand new acquired. Bullshit. Even if they are new, even if they are plant and machinery, but they are ineligible because they are not going to be used, they are not going to be installed for what? Manufacturing. They are not going to be installed for power generation, distribution and transmission, etc. Getting my point? So will you get any depreciation on them? Yes. They are used in your business. In your business you are using them. You are going to get normal depreciation on them. But you are not going to get. For additional depreciation they are ineligible. Number one, ships and aircrafts. Number two, we have been screaming on top of our voice. Buy new plant and machinery, buy new plant and machinery and see what you have bought. Will you get depreciation on this? Yes. Because even if it is a second-hand plant and machinery used in your business, the normal depreciation will be available on that. But we are not going to allow additional depreciation on that. Even if it is used for manufacturing, even if it is used for power generation, distribution, etc., still we are not going to allow additional depreciation because this is not a new plant and machine. This is a second-hand plant and machinery. Before you, somebody else has already used this. So, after somebody has used, now you are using it. For you it is second-hand. Hello, we are not going to give any additional depreciation on that. So, second-hand, even if used for manufacturing, even if used for power generation, distribution, etc., yes or no? Still there will be no additional depreciation. But you can still calculate, you can still claim normal. So can I say normal is available, additional is not available. Here, normal is available, additional will not be available. Now, any plant and machinery which is acquired and installed in residential accommodation, including guest house, etc., or they are installed in office premises. If you are not installing them in factory, they are not going to be used for manufacturing. If you are not installing them for power generation, power distribution, power transmission, that means here if you are going to install, they are not going to help you in manufacturing. They are not going to help you in power generation, distribution and transmission. So even if these plant and machineries are new plant and machinery, still you are not going to get any additional depreciation. But since they are used in your business, we are going to give you normal depreciation. But don't claim any additional depreciation because they are acquired and installed in residential accommodation, including guest house or office premises. Few examples of these type of plant and machinery can you give me? Air conditioners. Air conditioners you have installed in office, you have installed in guest house, or you are installing them in residential accommodations, office premises. Then on those ACs you are not going to get any additional depreciation. But AC you can install in factory premises. That AC is going to help you in manufacturing. On that AC you can claim additional depreciation because that AC is installed in manufacturing. Sir, AC can be installed in manufacturing? Yes, absolutely. One machine is there in my factory. That machine continuously works 24/7. 24 hours, 7 days in a week. Every day that machine is under, operation. Now because since that machine is continuously used, it generates heat. And if that heat is not maintained at a certain level, no, that machine will crash. So to maintain the temperature of that machine, the place where the machine is installed, I have installed ACs all around. The AC is throwing cool air on the machine so that machine can maintain its temperature, it does not crash. AC is installed in factory. I can claim additional depreciation on that. Additional also will be available, normal will also be available. But if that AC is installed in office, in director's cabin, if that AC is installed in accommodations which I am giving to my employees, residential accommodation, if that AC is installed in guest house, etc., no additional depreciation. Any plant and machinery which is installed in residential accommodation, guest house, including guest house or office premises, on them I can claim normal, but I cannot claim additional depreciation. Yes or no? Any office appliances also. What are the office appliances? Printers, fax machines, yes or no? Including computers. Even computers are also treated as office appliances. Can I claim normal depreciation on them? Yes, but I cannot claim additional depreciation. Why? Because since they are named as what? Office appliances, meaning they are installed in the office only. Computers are generally installed in the office only. So are they directly used in your manufacturing? No. Are they directly used in power generation, distribution, transmission? No. So why to give you additional depreciation on them? Sir, but there is one machine in my factory. There is one machine in my factory. With this machine, I have installed a computer also. And if I give a command through this computer, only then the machine does the production. Then this computer will not be treated as office appliance. Then on this computer also you can claim additional depreciation. Otherwise the computers are installed in the office only, no? Any other office appliances are installed in the office only, no? Getting my point, what I am trying to tell you. So office appliances including computers, no additional depreciation till the time they are not actually installed in the factory. Getting my point? Next one, vehicles. Vehicles are used inside the factory or outside the factory. To transport my material, to bring the raw material, to transport the finished goods, or for transportation of my employees. Some motor vehicles are there, yes or no? Some vehicles are given to the directors as motor car facility. Some vehicles are given to some employees as motor car facility, yes or no? Those are used in my business. But are they installed in factory, etc.? No. So on them, normal depreciation can be available. Additional depreciation will not be available. Sir. Some small vehicles usually run on the production floor. Can you see this? This is also a vehicle. But this type of vehicle is used inside my factory. We'll take the raw material to the production floor. Production etc. will happen. Take the finished goods and move the finished goods to different locations. On these vehicles, can I claim additional depreciation? The answer is yes, because they are used in manufacturing. But other vehicles, cars, trucks, buses, can I claim additional depreciation? No, because they are not used in production. Will you remember all these things or not? I don't know. Now, any new plant and machinery, the actual cost of that is already allowed as a deduction under other provisions. Bloody, we don't give normal depreciation on that, and you are asking for additional depreciation. Entire cost, bloody, we have allowed under other sections. That cost is not eligible for normal depreciation, and 20% of that we will allow you as additional depreciation. Forget about that. Few sections will come. Section 35. Any plant and machinery, any asset you acquire for scientific research, then as per section 35, entire capital expenditure, entire cost of that asset is allowed under section 35 as a deduction. There is one section 35 AD. If you are doing a specified business, which business? In that specified business, whatever assets you are using, the cost of that asset will be fully allowed as a deduction under section 35 AD. Bloody the entire cost of that asset we are allowing you as per the provisions, other provisions of the Income Tax Act. Now you are wanting to claim 20% of that cost extra in the form of depreciation. Bloody we don't allow the depreciation on those assets, normal depreciation on those assets. Forget about additional depreciation. So any new plant and machinery, even though the plant and machinery is there, even though the plant and machinery is new plant and machinery, but if the actual cost of that plant and machinery you have already claimed from us under any of the other provisions of the Income Tax Act, that we are not going to allow you in the form of additional, no additional depreciation on those assets also. No additional depreciation on that new plant and machinery, even though it is used in manufacturing. See, there is 35 AD. Which section? In 35 AD, different types of businesses are there, specified. One business is production of fertilizers. So for the purpose of any specified business, if you acquire any asset, the entire cost of that asset is allowed as a deduction under 35 AD only. And production of fertilizer is a specified business. Now just imagine, is it a specified business? Production of fertilizer, which is a manufacturing business. In this business, whatever new plant and machinery you have acquired, don't you think the entire actual cost of that new plant and machinery you would have already claimed under section 35 AD? That cost, how do we allow as a depreciation? We allow that cost which we have disallowed. We allow that cost in small parts in the form of depreciation. Asset which you acquire for business, the cost of that asset we have disallowed, and that cost we are allowing in the form of depreciation in small parts. But sometimes the entire cost we allow as a deduction. Why that cost should we allow in the form of depreciation? Understanding or not? We don't give you normal depreciation, forget about additional depreciation. 6 plant and machineries. Will you remember the names? First one. Second one, second-hand plant and machinery. Third one, any plant and machinery which is acquired and installed in residential accommodation including guest house or office premises. Next one, any office appliances including computers. Next one, vehicles. And last one, any new plant and machinery whose actual cost is fully allowed under any other provisions of Income Tax Act. Hello sir, on these 6 plant and machineries, you cannot claim additional depreciation. But you can claim normal depreciation on them other than point number 6. Understanding? That's it. Now, small CBDT circular is there. CBDT clarification. What clarification? CBDT clarification. And what is the clarification? CBDT says that, see, let us clarify one thing. If the assessee is in printing business, which business? Or printing and publishing business, their business also we will consider as manufacturing business. Don't you think this clarification will be binding on department? Now department and all the officers will have to follow this circular. Any circular, any confusion which is there, cleared by CBDT in the form of issuing circulars, yes or no? And that circular is clearing a confusion or giving a special direction that boss, printing business or printing and publishing business is what? Manufacturing business. Now every assessing officer, entire income tax department will have to follow this, binding on them. But don't you think this is a beneficial circular for those assessees who are in this business? Because their business is treated as manufacturing business. In their business, whatever new plant and machinery they will bring, on that they are eligible to get additional depreciation. Why? Because their business is treated as manufacturing. So if the assessee wants, he can take the benefit of beneficial circulars. So now if any assessee is there in printing business or printing and publishing business, he can say, my business is manufacturing business. See, CBDT has clarified. And for my business, whatever new plant and machinery I have acquired and installed in my business, on that I can claim additional depreciation also. All the manufacturing business can claim, but even this business can claim what? Additional depreciation. Why? Because even this business is treated as manufacturing business. In the examination, if the question comes, Mr. Rahul is in the business of printing and publishing. Following is the P&L account, this. Adjustments are given. One adjustment is saying, in the business of printing and publishing, Rahul has acquired following plant and machinery, A, B, C, D. This much cost, this much cost, this much cost, this much cost. Calculate the PGBP income. While calculating the PGBP income, you will also calculate the depreciation and you will take the deduction, but you calculated only normal depreciation, you forgot additional depreciation. You lose the marks. Why? Because you forgot this circular. Examiner wanted to test that whether you are aware about this circular or not. If you are aware about this circular, immediately you will remember, oh, assessee is in the business of printing and publishing. CBDT circular was there. That circular said that this business is manufacturing. So assessee is in the manufacturing business. In the adjustment it is written that he is acquiring new plant and machinery. On that new plant and machinery, I am calculating only depreciation. Ayyo, normal depreciation. With that, additional depreciation also I will have to calculate, and I will have to claim additional depreciation also. If you will forget to claim additional depreciation, you will lose marks. Understanding? So this is the end of 32.1.2a, additional depreciation. First of all, tell me, will you calculate the value of the block? How do you calculate the value of the block? Tell me. Opening, add additions, less deletions. Then whatever depreciable value is there, on that depreciable value, you calculate normal depreciation. On the depreciable value, you will calculate normal depreciation. But additional depreciation, you will always calculate on additions. Assets which are plant and machinery acquired in this year. Actual cost of that plant and machinery will be shown as additions. Yes or no? So additional depreciation will always be calculated on additions. Meaning, new plant and machinery acquired in this year, installed in this year, actual cost of that is shown by you as addition. On that addition amount, you are going to calculate additional depreciation. Now see, if you remember, can you see this case? Case number 1. Hello? Case number 1. Did you calculate depreciation? How much? This was your normal depreciation. Now for example, this is a plant and machinery block of an assessee who is doing a manufacturing business. So, has he acquired a new plant and machinery in this year? Has he acquired new plant and machinery in this year? Yes. One is this. Second one is this. Actual cost of new plant and machinery. What did I say? Actual cost of new plant and machinery. On that you are going to calculate 20% additional depreciation. Don't forget how to calculate normal. Normal is calculated on 7 lakhs. Normal will be calculated on 7 lakh. But additional depreciation will be calculated on 2 lakhs and 4 lakhs. On 2 lakhs you are going to calculate 20%. 40,000. And on this 4 lakh you are going to calculate? On this 4 lakh you are going to calculate 10%. Why? Because 4 lakh is the cost of that plant and machinery which is acquired in this year but put to use for less than 180 days. So instead of 20, you are going to take 10%. And remaining 10% on this 4 lakh, you are going to take in the following year. That you are going to give as a note. That why did you take additional depreciation only 10% on this 4 lakh? What about the balance 10%? Next year. And what about the 2 lakhs? So on this 2 lakh, 20% will be 40,000. On this 4 lakh, 10% will be 40. 40 plus 40? 80. Along with this depreciation, you are also supposed to reduce additional depreciation. Now don't just reduce normal, because along with normal, out of this cost, we are giving you additional also, no? If you will not reduce that additional depreciation over here while calculating your closing WDV, what will happen? That 80,000 which you are claiming out of the cost right now as what? Additional depreciation will remain in the cost and will be later on allowed as normal depreciation also. For that, double deduction will be available. So do one thing. Along with reducing the normal depreciation, also reduce your additional depreciation while calculating your closing WDV. Because out of this cost, some cost we are allowing in the form of normal depreciation, and out of this cost, 80,000 cost we are allowing additionally in the form of additional depreciation. Reduce that amount also. So while calculating your closing WDV, will you reduce normal depreciation? Will you reduce the additional depreciation? After reducing both the depreciation, whatever value will come, that will be known as closing WDV. Will you remember? That's all for today. We are meeting tomorrow. Till then, bye-bye.